peace and power, and welcome back. I am here tonight to share with you a 101 that I had the honor of sharing with the Forex TradeHER. She is a Forex guru. She was featured in Yahoo Finance. And so I could not wait to have this 101. Now, while we were doing the 101, we both expressed, our love for each other because I've been following her on Instagram for a couple of years now. I also participate in her group chat where she gives out signals, and I was just telling her how much I appreciate her in everything that she does. So we're gonna get right into it. We're gonna get into the video. Give me 1 minute while I get it pulled up. I hope everyone is well. I am pulling it up right now. Give me a minute. I know I haven't been here in a minute. It's just I've been really trying to get my other YouTube channel up to par. And so just trying to see which of these is the video. Eh, nope, that's not it. Hold on. Oh, here it is. Duh. All right, so I'm just gonna screen share. And of course, I'll add my commentary as we go. All right, so her Instagram is Forex TradeHER, and also her YouTube is Forex TradeHER as well. I will drop her YouTube channel's link in the description box, but let's get into it. Okay.
So, first things first, I'm so happy that we're here and I'm so happy that we get to do this. I literally have been waiting. I think it's been, how long have you been following me? I know it's been at least a year.
Yeah, maybe a year and a half because I've been doing Forex now going on 2 years. And so,
Awesome. That answers one of my questions. I was going to ask, how long have you really been into Forex?
right. It's going on 2 years. I've been told it takes 3 to 5 years to master. And so in this last year, I'm just learning patience, like big time.
Patience is definitely important. I know, I remember, what was it, Ripple? Was it Ripple that was getting you?
Mm-hmm.
Yeah, I know Ripple.
Well, Ripple did me good. It was just I got into Ripple on the trade that you announced in the chat, and it was a good trade. It went $294. But then I went back to my pair, Great British Pound, and it bust me up.
It's okay. It happens. It happens. Was it with GJ or GU?
GU.
It happens. Yeah. It happens. That's why we're going to get into this call and we're going to see what's going on. That also brings me to, what are the goals of this session? What are you looking to accomplish? I know you have questions, or maybe you have charts you want to go over already. I'm ready to get into that whenever you are.
Okay. My question is, because I see that your trades, you're in them longer, and that was my original goal, not to be trading every day like a job, because that's what it was for like the first year, and that kind of wore me out. And so, just what kind of trader are you, and then how did you get to trading that versus the daily?
Well, this is what I will say. First things first, my style of trading is interesting, to say the least, because when I first started with Forex back in February 2019, I didn't know what I was doing, obviously. I just knew that I could make money off my phone from looking at charts and stuff. And I was just like, okay, let's figure out what we're gonna do with this. So the more I got into it, in the beginning, I started with scalping. And from that point, I converted to day trading because it just made more sense. I didn't have to be on charts as much as the scalping. And at the time, I didn't even have enough time to be on the charts, a lot. So I converted over to day trading. And that really just came from, honestly, me understanding structure more and me understanding different time frames more and me being able to adapt to market changes. And then, long story short, now here in 2022, I've even went from day trading to swing trading. So like there's times when I'm in trades for like 2 weeks, but I'm still taking partial profits as the trade is running. So I would love to show you how. Yes. Oh, thank you. I appreciate it. I would love to show you how exactly I do that. And I can show you particularly with the pairs that you trade, because the strategy I use, it works literally for any pair. It's really just top-down analysis. And I will also say, even though I'm swing trading, lately I've actually been dipping back into holding my trades for a couple hours. So I definitely dabble back and forth.
So swing trading is when you trade a couple of weeks, but a day trader trades for a couple of hours.
Yeah, so day traders, the difference between swing trading is swing traders, we mainly we're mainly in our trades for usually a few days, even up to a week. And then sometimes it even can become a position trade and be held for, 2 weeks to 3 weeks, which is then pushing you into a month. So it just depends on that. And then as far as day trading, day traders usually hold their trades and exit their trade in the same day. So literally within 24 hours, if not, less than 24 hours.
Okay. Yeah, my entries, my trades be on point, but I'll get in a trade too early and it'll go all the way into a great gigantic pull. And sometimes I don't have the the wiggle room
to hold it down.
Yeah, so then of course it kicks you out of the trade, which that's since I came back from Georgia in December. That's been my biggest thing. The whole while I was in Georgia, my account was booming. It was like, okay. And then I come back home and it just seemed like every trade I got in, there was some kind of pullback and it was knocking me out back to back. And so, yeah.
Well, it sounds like from the sounds of it, it sounds like you might be getting your entries at a low instead of a high point. So like, I'm pretty sure you heard of the term buy low, sell high. That literally applies with Forex. So I'm pretty sure we can nip some things in the bud today. I don't know if you wanted to share your screen with me, if you had any charts you wanted me to look at, or if you want me to share my screen and just go through the pairs that you're used to.
I want you to share yours. I want to learn from you.
All right, no problem. Because sometimes I have people, they come to me with their charts ready and they like, can you help me with this, this, and that? Or like you say, you want to just learn. So that's fine.
Yeah, I keep hearing you say top-down analysis. And so I'm like, yeah, I need to know what that is because most of your trades that I've taken, I would say probably one because I probably didn't have the wiggle room, but they all come through. And so I definitely need to learn what top-down is.
Look, well, I got you. We about to get right. I'm going to share my screen with you, and I'm going to show you exactly what I do so that you'll be able to do it as well. And like I said, I'm going to send this back to you so you'll be able to rewatch it as many times as you need to.
I appreciate you.
You're welcome. I appreciate you for booking with me. Like, you don't understand. I've been waiting for you, girl. I've been waiting.
Right. I'm like, last year just got so hit. I'm like, okay, well, maybe I went back into the academy thinking I was doing something wrong. It's like, no, girl, you done learn what you done learn from the academy. Move
Were
forward.
you with IML too? I
Mhm.
think.
Yeah.
Yeah, so I started with them too. So hey, look, it's like everyone's experience is different with them. That's what I will
Right.
say. It's not
Right.
a bad platform. It just depends on a lot of different factors and once you're inside of there.
Right. Absolutely.
But you use TradingView, right?
Okay, so I want to pause here and state that I am still with I Am Academy. I have an actual team with I Am Academy. And so I just want to be clear here. Everybody's experience is different. For me, I'm one of those people that jump right out there off the porch. And so when it comes to how I am went for me, I was out there getting it. And I'm not saying that Shelly wasn't. It's just I went to the conferences, I met with people, and so a lot of people just sign up online and they never come out to the public events to meet other traders because with IM it is a awesome educational platform, but you have to show up in person. You have to meet other people, other traders, just because the experience is just a little bit better. People share their stories, you bond, and it's the trade world. And so that's the difference. That was my experience. Most of the conferences are down here in Houston, so it's like a 4-hour drive. And I don't mind driving to be around people who understand financial markets and understand how to get in those markets and make their own way. Let's be clear. That's why I love the Forex TradeHER. She has made her own way. They featured her in Yahoo Finance. And in the description box, I'm going to drop the link to the article and also, like I said, her information. Okay, let's go.
I do.
Okay. I just want to make sure because I always ask people like I've been using TradingView for 3 years now, but I don't know if there's any other platforms out there that I just never heard of that allow you to look at charts like this. So I always ask just in case.
Right. No, I don't know of any either.
I believe it. TradingView is very popular.
Right.
So would you like to go over GBP USD since that's the pair you trade?
Yeah, I'm really about to dump them, but that is the pair that I married. So yes.
Well, let's see if I can help you stay married to it. Because I've divorced some pairs, I will say. So I get it. So
Girl, we about to
hopefully.
break up. We about to break up. They been eating up my account. I'm like, oh no.
And look, and see, it's funny. When I first got into trading, it was a couple pairs that I couldn't get with. And any GBP pair was definitely on that list. But as I've like gotten so into the skill and my talent has gotten better, I somehow got into trading GBP pairs. I don't know.
Well, I was trying to do all the G pairs. It's like no. And what hurts me a lot is the JPY. I don't know what it is, but every time I get in a trade on JPY, I lose it. And so it's like, let me just stick to the GBP.
Yeah, I always tell people whenever depending on, how experienced you are, I always tell people stick to one pair, get that pair good, get it understood, and then, move on to the next pair. Because I could trade a lot of pairs, but that's because I took the time to really learn one pair and just learn about candlesticks and market structure and all that. And once I started understanding everything, every other pair was just easier to learn.
Right.
So I need to pull up one tab. And I'm going to email you this too. I always email people. Any PDFs I show you, I'll email them to you just so you'll have them. I'm going to pull up a trading checklist. And I know the trading checklist by heart, but I want you to know it. It's really how I ideally approach the market. So let me pull that up. And I have a cuter one, so don't worry. This is like my behind the scenes one.
Sorry.
You're okay. I hope I didn't make you laugh. Okay, let me see.
Also, top down has something to do with the time frame.
Mm-hmm.
Yeah, I'm thinking it means you trading on a chart from here down. So, okay.
Something to do with the charts, but it's from the highest time frame down to the lowest time frame.
Okay.
So the first thing I always tell people, whenever you're approaching the market and if you know you're going to be entering the market that day, you always want to make sure you check Forex Factory. And I'm pretty sure you know what Forex Factory is, right? It's a site for news.
Oh, no. I never even checked the news, chat.
Okay, well, see, that's why I'm going to send you this checklist because news is very, very, very important. Like,
hit me on some accounts too. I'd be like, oh, I didn't know the news today. Okay.
Yeah, news is so important. And I'm not going to spend too much time on it because, we only have so much time. But to make it simple, it's only a few things that matter when it comes to news. You see these different folder colors they have here? The most important thing is the orange folders and the red folders. Orange folders are medium impact news. Mm-hmm. What that means is whatever that news is, they're expecting it to affect the market in a medium way.
You said in a medium way?
Yeah, so it's not going to be super drastic, but it will be enough for it to cause the market to, move how it moves, depending on if that news is good or bad.
Right.
And then the second folder that matters is red impact news. Now, this matters because red impact news is high impact. So if that news is good or if it's bad, it's going to affect the market pretty drastically. And when I say affect the market, I mean, whatever that normal trend is, the news is going to affect that, not for the entire day, but for about 30 to 45 minutes.
Okay.
So once the news comes out, I always tell people if you're going to enter a trade and you see that there's red or orange folder news coming out, you want to make sure that you enter the market 30 to 45 minutes after that news has come out, because you don't want to enter in the middle of a high impact or medium impact news release, because that can push your trade down, pretty negative if the news, doesn't work in your favor for whatever position you're in. Does that make sense?
So, excuse me. Right here, for me, I can see the news on the chart. I just don't like to dictate or allow the news to dictate whether I'm a trade or not. And that might not be a good decision, but most of the time it work out. Sometimes it don't. Because sometimes the news is like 5 red folders. And so those are the days you definitely should be. So I learned that lesson too. She also spoke about top-down analysis. Like I said in the video, I just thought that meant price-wise, you are trading only from the selling point. And when I look at my trade record, I mostly trade selling. When the market starts buying, it has started putting me like out of my comfort zone. And so I am grateful. And I was gonna make this video public, but this is just for my people. I'm going to make it unlisted, and I am going to send the link out in an email to everybody that took my Mastering Crypto class because they showed up for me, you know. Even the people that didn't take the class, though, will be able to see this video. But I just want to put the disclaimer out there that this is for traders. We actually went to an academy, the same one, and learned how to trade. And so this is not for a rookie. This video being shared by no means go out there and gamble off your money. Because if you don't invest in yourself by learning properly, skill, that's your foundation, and y'all heard her refer to it as a skill. Well, keep that in mind too. With a skill, you have to keep doing it to get better. Practicing and studying and being all into it. And she's good. She didn't stay where I am forever. And she blazing her own trail. And so that's what it's about. And it's room at this table. People always talking about a table, ask for a chair, this is that. This is a table that only 3% of the world participates. And so you don't necessarily have to want a seat at that particular table, but you definitely can go back and forth to the table and build your own table. I'll say that. So yeah, I hope my microphone is clear. Check, 1, 2. Okay, so let's keep going.
Sense.
Mhm. Mhm.
Okay. And you can let me know if I'm going too fast too.
No, I know by experience because when them red photos hit, if I'm in the market, it always affects my trade.
I believe it. I believe it. And just to even sum it up, whenever you're looking for news, because I know there's literally so many currency pairs, you only want to look for news that pertains to whatever you're trading. So in our case, we
And so right here I said always, I want to clarify what I mean by always is if you have the wiggle room and you're in a trade and the wiggle room allows you to stay in that trade without getting bumped out, then the folders might not affect you. But if you don't have that wiggle room, you definitely gonna be affected by a red news folder. This day I was excited and so might have been coming off on some goofy, but in reality, I just continue a conversation with her like we had been talking in the chat. And so we know what we're talking about. But I just want to inform y'all. Hold on.
only care about GBP or the US dollar.
Okay.
As long as you don't see anything red or orange for that currency, you should be okay to enter the market that day. And what I will say is, because I don't believe it'll pop up on here, but the stuff that's happening with Russia and Ukraine is also affecting the market. So just keep that in mind too.
Okay.
Like, I don't know if you noticed the moment that Russia attacked Ukraine, everything pretty much started selling.
Yeah. Yeah.
So just keep stuff like that in mind, because I don't think they'll they normally don't have stuff like that on here. This is usually for economic news and stuff like that. But that's it though for Forex Factory. And if you already know, if you already experienced, the market tumbling on you while you were in for some news, now you know to make sure that you're taking your entries after this news comes out.
Right. My biggest problem is I have been lazy trading. And so I'll see the photos and be like, you know what? I'm gonna get in anyway. And sometimes it'll go in my favor or whatever, but I didn't think that it was like, okay, if it's US news and Great British Pound news, both of those together, And so if it wasn't any news for the Great British Pound, but it was U.S. news, it still might affect the market.
Yeah. Well, what I'll say, don't be, huh?
Is that what you were saying?
Yeah.
Okay.
Excuse me. Yeah. And then also just to, if you see news coming out, girl, don't ignore it, because it's not going to ignore your account. It's the market going to do what it want to do. And I would hate,
don't do that.
don't willingly step into the crossfire. Right.
And I do. I be like, I'm out here, baby. Yeah.
Well, look, see, I'm happy you're honest, though. Honesty goes far.
Right. I'm like, okay, now I've been playing. Now it's time to get serious about this.
Yes, because I already know that I know that you have a good experience level. You just have to fix some bad habits.
Mm-hmm.
So,
absolutely. I wasn't using a stop loss for like the whole time. And so that was something else I had to.
See, but you nipping stuff in the bud, so that's good. Now we're gonna get into top-down analysis.
Okay.
And what we're gonna do is we're gonna start on the higher time frame. And the reason we do this is the weekly time frame is the best time frame. It really like gives you a bird's eye view of like what's happened in the past. So I'm going to show you how I exactly find my supply and demand zones on the weekly time frame. And then I'm also going to show you how to recognize the overall trend, how to confirm your supply and demand zones as you go down to different time frames. Because now you're thinking like, okay, I marked this on a higher time frame. Now I'm on a lower time frame. You just want to make sure, stuff is lining up how it should. We're going to recognize chart patterns, which is how you get your entries. Sometimes you might not see chart patterns. You might see candlestick patterns, which is another way to go about getting your actual entries. And I'm going to show you how I make sure I have 3 confirmations, which is saying I have 3 reasons why I'm going to enter the market. And then, of course, having a defined risk entry and exit point, which is, your stop loss, your target price, and then ideally where you're going to enter the market. Sounds good? So let's go ahead and get into this. Now, I know your chart might look different than mine. I'm pretty sure you already noticed that my candles are pink and white. My favorite color is pink, and my brand color is pink. So it's only right my chart matches. But as long as you can understand, the uptrend is going to be your buyer's candles, which is white. Downtrend is my seller's candles, which is pink. We will be able to get through this deal. So first things first, let me put this screen down just a touch. Oops. All right, so first thing I want to do is I'm going to adjust my screen just a touch. The whole point in being on the weekly time frame is for us to find our supply and demand zones relevant to where price is currently at. And then you want to also make sure that while you're doing that, you keep in mind that whatever happened back here is going to happen up here too. The weekly time frame honestly saves you a lot of time though with back testing. So I'm going to use my rectangle tool. When you're marking your supply zone, you always want to make sure you stay relevant to current price. So I'm going to put my first supply zone right here. Now, the reason is this is the first previous high from where price is currently at. The second previous high would be right here. It's kind of like literally just a little bit above it. So this zone actually is able to do both of them. I could honestly even, let me adjust this a little. There we go. So I can honestly even lift this up just a touch. And then that way I have my zone here where this little first sign of rejection is. And then down here is pretty much just a retest of that level of price. Now, if we even go back a step further, just to see why else I put this level of price here, because this is just the first piece of it. The second point would be, I noticed that price test this level here. It turned into a demand zone slightly here, but that's okay. We have another demand zone right here. If we jump back, there's a little bit of space right here. So that means that price was already selling. So obviously it's not going to reach up here.
The sound is kind of, do you have like any devices around your mic? The sound is like chopping up a little bit.
I don't. It might be the internet connection.
Okay. So you calling? You said what?
Can you hear me?
Yeah, it's just like at the end of your sentences, it's like a radio computery type of sound. But
I don't know. I'm sorry. Let me see if I can turn this up just a
no, it's cool. So right here, you call this a demand zone because that's the zone where price keeps searching.
So this is a supply zone overall. And the reason is this is where our sales are taking place. So if you notice right here where I marked it, that's where the start of this sale happened. If we go back to this point, you notice the sale took place here. If we go back, now right here, there's a little bit of space, and that's because price was already sold, so it didn't go back up there yet. But if we go back here, you notice price sold here as well. So this is a potential supply zone. And this zone is relevant to where price is currently at. Now we have to go a step further and mark our demand zone. Now, your demand zone is where your buys take place.
Girl, I am in shock. I never knew that, like ever.
Really?
No. Let me write this down. You said what?
I'm happy you know now.
Right. So supply is what sales take place.
Yep. And this is smart money concepts. And what smart money concepts is, that's basically how the banks trade and how like institutional traders trade.
Girl, and I said that to my classmate. I said, I booked an appointment because she is literally trading with the banks. I was looking and noticing it, how many pips you're trading. I'm like, she got skills.
Thank you. I appreciate it. Yes. And the way I find those amount of pips is literally from top-down analysis. Like, and I can still, even with this strategy, I can still catch smaller trades, which obviously are quicker trades. But if I want to catch the long-term positions, it comes from top-down analysis.
And you said this is smart market analysis?
Smart money concepts. Oh. And I'm sure you can find different videos on YouTube about that. There's a lot of different people that make videos on that. I might even be able to send you some. I had one video, I have to find it, but it was a really good video covering it.
Girl, thank you. I never knew that. I thought that supply and demand, nobody really ever, unless I missed it. Yeah, thank you, girl.
You're welcome. And just to move to the next step, so this is our supply zone. Now we're going to find our demand zone, like I said, where your buys take place. And when you're looking for your demand zone, you want to be relevant to where price is currently at. So now we're going to be marking our level below. I could put it right here, but I believe that this is going to continue selling, and that's going based off of what's happened in the past. So I'm going to go ahead and take this zone, and I'm going to clone it, and I'm going to drag it down to here. Now, the reason I did that is, like I said, I could have put it here, but I feel like that would be a little too tight. And I know just from noticing how GBP pairs tend to move, they usually average like 200 pips minimum, if not more. So I believe this is going to continue selling. And that's
I'm going to sell right now.
Huh?
I'm going to sell right now.
Oh, yeah, you should be good. honestly, it should keep selling for the week. Because if you, just to point out while we're talking about it, if you notice, the overall trend on the weekly chart is down.
Right. I've been watching the day chart, and I know I said, well, it's not making higher highs, so.
Yep. So you should be good for your position. And just going back to this zone, excuse me, the reason I put this here is because this will be, I consider this the first previous low. I don't consider this one because it's still moving and I think it's going to push down. Mm-hmm. So I'm going to put the zone here because this is a very good low. That buy that took place. And then if we go back here, price respected here and pushed up. Now, these three areas, you do notice some sales took place, which is absolutely fine. In those moments, you would have just been able to use this as a supply zone. Mm-hmm. And that's the thing.
It looks like they were artificial or manipulated sales.
Mm-hmm.
So yeah, it has to come back up
place anyway. In these points.
Mm-hmm.
And then I forgot what I was going to say. The most important thing to keep in mind with these levels are your demand zone can easily turn into a supply zone because price always moves up and down. So even if this is a demand zone at, this point right here, or at this given point here, or even right here, you always have to be able to adapt to the market. So that's where candlestick patterns and chart patterns come into place. Mm-hmm. And I kind of want to explain this before I move to the down to the J chart. I'm putting this zone here just to show you something. Okay. And if you get confused, just let me know because I sometimes feel like I'll go a step too far. So just let me know if there's any confusion. But these sales that took place here, if you want to look at chart patterns, it's kind of messy, but these are head and shoulders. And where is let me see. So you have your left shoulder here that formed that supply. And then you got the head right here. And then you have the right shoulder right here. Wait, where did it go? Hold on, let me redo that. So you got right here. And then here. And then here. So you see how I just drew that out?
Yeah.
So those sales take place literally, as long as you can keep up with chart patterns, you can easily catch some great sales or, great buys. Because even if, I wonder if I could clone this so I don't have to redraw it. Let me see if it'll let me move it. So if I move this over here, now it might be a little bit off because it's not the same size as that, but that's another head and shoulders.
It sure is.
So these are important things to recognize at your supply zone. And I know I just said that's a demand zone. I know I did. It's a demand zone for today's market. But if we go back to where we're at right now, it's a supply zone. Does that make sense? Make sense?
Yeah, it makes sense.
I'm so glad that I decided to stay up and watch this video again. So my question to her now is, hold on. I'm sorry, y'all. Don't put my mind into writing. Is that shame out? I want to know question would be, so when you're looking at chart patterns, um, are you looking for the chart pattern to be touching the supply zone, if that makes sense? Mm-hmm. All right, let's move forward.
Okay, let me know, girl. Let me know.
So what are you using to highlight across the man zone? Are you using a rectangle?
Yeah, so if you go over here on your left side, it might be on your right side on your computer. Sometimes computers are different. But if you go down to the fourth tool,
Okay.
there is some different tools in here. There's a rectangle tool. I use that to mark my supply and demand zone.
Okay.
And normally the default settings are set like this. So when you do use it, just make sure you go to the settings, go to style, and then hit extend right and left, and it'll go across your whole chart.
Okay. Wow.
Yep.
How to use TradingView.
Yes, girl. So I'm going to delete these off of here now. I just wanted to show you why those turned into supply zones. It's literally just straight chart patterns. But going back to today's market, I'm going to delete this zone back off. I always tell traders, you don't have to have every zone marked. Sometimes that's where confusion comes in. The only time I will mark a third level is if price is at one of my zones and I need to know where it's going next.
It looks so pretty with the pink and white, and it's clear because I don't like a lot of clutter, but my chart is kind of cluttered. I use the moon indicator, Jupiter's ascension. That has been a helpful tool for me, and just a couple of more, the cloud and stuff like that. But I need to clear my chart.
This is what I will say is if certain things are working for you, keep whatever is working. If it's causing confusion, I would say get rid of it, unless you can make it clear for you to understand it. Because simple trading comes from a clean chart.
Right.
So whatever's working, keep it. If it's not, put it on the back burner.
Okay.
But going back to top-down analysis, we found our supply zone. We have our demand zone. Both zones are relevant to where price is today. Once you find that, you go down to the day chart. And this is where you'll be looking for confirmations. And honestly, actually, just to go back to the weekly, normally my strategy is zone to zone because that's how I get those big setups that you're talking about. So what I will say is right now, and this is just because I usually trade literally zone to zone, since price isn't at my zone, I normally wait until it gets to either one of these zones before I take a trade, because right now I'm thinking it already left this zone, so I don't know what it's doing. It could be retesting up here, or it could just be a small pullback for it to continue to push through. But because I don't know that and I can't see it, I usually just wait and let the market do what it does. Once it gets down to here or up to here, then I'll go ahead and look for a setup. But right now, this setup is not clear for my strategy.
So you wait till it gets to the zone before getting.
Yep. And that's if I want to catch a long-term position. But if I want to catch like a day trade or something, or maybe a quick 20 pips or something, I go down to the even smaller time frames.
Okay.
So for this, going down to the day chart, first thing you want to do is, let me adjust this. So the most important thing to do is first make sure your zones are accurate. And what that means is you want to make sure that when you switch down to the lower time frames, it's still sitting in those areas where you will get your ideal entries. So like if we notice right here, we notice price respected it here and they did respect our demand zone by buying. It looks like right here what's happening right now, it looks like GBP USD tested down here and it looks like it's pushing up. This candle has 2 hours though. So I don't know if it's going to reverse. I kind of want to know where you got your entry just because I know you're in for the sale.
My entry is 1.33325.
So you should be okay. So you got in for your sale down here then.
Horrible entry.
Yeah, girl. Horrible entry. And I hate to be the bearers of truths, but that's a bad entry. My best advice, as long as you're okay with your risk, you can hold it through. I'm not going to tell you to close your trade because, like I said, this thing could definitely push back down. And if you also look at it, the main thing that will let me know not to exit a trade is if the bearish momentum is still strong. So just looking at it right here, these are the only buyers candles that are coming in. That's not really enough to overpower the sale that's happening.
Right.
So I always let my candles fully close before I ever consider exiting a trade. And then it also depends on where your stop loss is set too. Because if it's not anywhere near your stop loss and you don't think it's going to go near your stop loss, then keep it open. But if you do see price is pushing to your stop loss or like about to hit it, then maybe close it.
I use whatever this is called on the bottom of your screen too. And so I have like, if it goes below the middle line, then I know it's going to continue to sell. But it's almost at my risk. Okay. I'm about to close. I'm give it a little while longer.
I was going to say, at least give it 2 hours because this has 2 hours before it closes. And I always tell people 2 hours is a long time for these candles. Like, it might seem like, oh, 2 hours, that's not enough. 2 hours is a long time for these candles. Like, anything can happen in that 2 hours. So, and there's no news coming out either. So, there's nothing that can potentially cause your trade to reverse. So, I will watch it. My only concern is this demand zone. That's my only concern. But like you said, I agree with you on stochastic, and the signals lines are still pointing downwards. So as long as these don't curve up, you should be good.
Right.
I want to see something. But next time when you do your chart for GPUSD, I was gonna say I couldn't hear you for a second. What'd you just say?
Do you recommend? I don't know why. I don't know what's happening. Do you recommend charting when you're charting from the monthly or the weekly down?
Weekly down. Monthly, you can check the monthly, but you don't have to chart anything on the monthly. Anything that's on the monthly is ideally for positional traders. So people that hold their trades for months. So if you don't plan on holding your trades for months, I wouldn't worry too much about the monthly.
Right.
Weekly is for people that hold it for, like myself, I hold my trades sometimes for 2 weeks.
Yeah, I've been in this trade for 2 weeks. I shouldn't have got back in.
It's okay. This is what I will say. Make sure you have a trading plan, right?
I do.
Okay. Just make sure you're following it then. Because I try to take 2 to 3 trades a day if possible. But that ultimately depends on the market and my trade. Like if I were to have gotten this sale like up here at this top point, I probably would have got 2 or 3 entries up here. And then those would have been my entries for this push down. Now, since I swing trade and I normally like to catch all of this, I would have got another 2 to 3 entries right here. So just to point this out, and this is
I got in on that when it dropped down at 1.35293. 35293.
See, that was a good entry though for the sale. That's literally right here. So that entry was spot on.
It was the greed that got me back in. Just, let me get back in. No, not a good idea.
You know, somebody in my IDMs was just telling me how they've been gambling their whole journey. I said, oh no. My heart was just like, oh God, jeez. Y'all can't do that.
Right.
The brokers literally, they look at us when we gamble, they be like, oh, ka-ching, 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 ka-ching. And then we sitting here on the side, I'm like, bro, I just blew my account. Or, bro, I just took a loss I didn't have to take. But they on the other hand happy. So y'all just got to think about it. Y'all making the brokers richer.
Yeah.
They don't need no more money. They get money off spreads, swap charges, and all. They don't need no more money from us.
That's crazy.
So just to show you, since you already got this good entry, I'm going to show you how you could have got this entry right here. And you don't have to get your entries on the day chart. You can go down to the lower time frames because I don't get my entries. The only time I do get my entries on the higher time frame is if I really plan on holding it, that whole way down. But most of the time, if I get an additional entry, I usually go down to the 15-minute.
So entries on the higher time frame is for 2-week trades.
It's called a wide range entry.
Wide range. Okay. And then you said for the 15 minutes.
That's for day trading. You can still use it for swing trading, but there's multiple ways to enter swing trades. 15-minute, or you can do the 4-hour in a day chart.
Okay. And all that's for day trading.
Yes, day and swing trading. Because if you get the entry on the higher time frame, you are expecting to hold it for at least. Where is this it? I have is this the tool? Yeah, so if I were to get an entry up here, and this is a date range tool, you would be expecting to hold it like this right here is 15 days. So 2 weeks. But if you go down to like the 15-minute or something, you can be in trades for 2 to 3 hours. Like I had and I felt bad I didn't send the signal to my chat. It happened so quick. Like I wasn't even expecting to take the trade, but I had got in Ripple on the 15-minute, and that trade literally hit within 2 hours.
Wow.
And I forgot I was in it. I wanted to send it to the chat, but I forgot I was in it. And when I came back, it was already done. And I was like, wow.
How many pips did it go?
300. Wow. A little bit over 300. So kind of light, but not light.
Right. That's not light.
Depending on how you trade it, it could be light, But
and so you did say you have 2 and 3 entries.
Yeah, but that trade, I only had 1 entry. I literally got 1 entry. I should have got 3. I didn't even know I was gonna take that trade. It just happened. Like I just happened to look at my chart. I saw a good entry, and I was like, I'm about to get in. And Boom.
I think I saw you say that in the chat though, that you was gonna get in.
Possibly, I would have to go back and double check because I don't remember. Because I don't know if we talking about that.
About it, and I was saying to myself, I'm not gonna get back in it.
Yeah, I was gonna say because I don't know if that was in regards to Ripple or GJ. Because the trade I took was with Ripple, and it was Saturday. I think that could have been Saturday. But for this though, just to show you how this entry would have worked, there's a few candlestick patterns that literally happen like verbatim. This one right here is a evening star. And what the evening star pattern means is it's usually an indication of a sale taking place. You got that middle candle right there, which you might not be able to see all the way. Let me put it like that. So you have that middle candle in the middle. That is your Doji candle. The best way to use a Doji candle as a sign of a reversal is recognizing it at your supply zone or your demand zone. Some traders, and the reason I say this is because some traders see dojis and they think like, oh my God, a reverse is about to happen. I'm about to go ahead and get in. That's not always true. The thing with doji candles is, depending on where you see them at, they can mean a reversal, or they can mean that the market just doesn't know what it wants to do, which is why I say it's important to recognize them at your supply zone, or right here, there's another doji, which is at the demand zone. That's when they're the most accurate when looking for reversals. So right here, we have an evening star pattern closed right at our supply zone. Once your evening star pattern closed, this is where I was saying you can get a wide range entry. You can go ahead and take an entry right off of the day chart candle and just, set your defined risk and entry point, all ideally based on the day chart. Which is why I really believe that even though you got a very low entry for a sale, I think you'll be okay, because I think that this is it's just pulling back to create a lower high, and then it should continue to sell. That's just my opinion of what can happen here. But this is ideally, this is ideally how I get my high potential setups.
So you're looking at a doji in the supply or evening star candles. You're looking for your candle patterns, or what are these
candlestick patterns?
Candlestick patterns in the supply or either in the demand zone. Okay.
Yep, you got it.
And I didn't know that either. I see them, but I didn't know where they're supposed to be on the chart. So.
Oh, well, that's what I'm here for.
Right.
And I'm happy that you're learning it, because candlesticks are literally, like, candlestick patterns are super important when it comes to entries, because this is where your confirmations come. So, like, for this example, as far as having 3 confirmations, my first confirmation would be that price was at my supply zone. My second confirmation would have been this 3 candlestick pattern, which is called the evening star. I pointed out the doji in particular because that is like a very important candle, and it's a sign of rejection, especially if it's at a supply zone, because that's telling me that when I see a doji at supply, it's telling me that price tried to buy. It went up to about here, but then it basically rejected and closed down in a doji. So that lets me that buy is done. Like, this was the exhaustion of that buy that was happening. So first confirmation, price was at my supply zone. Second confirmation, 3 candlestick pattern, evening star, doji, sign of rejection, all at my supply zone. So that's your second confirmation. Now, my third confirmation comes from Stochastic. I always throw an indicator in at the end. And the reason I throw it in at the end is because price action is everything. Like, it doesn't get any better than supply and demand and candlestick patterns. I know it's not that fun sometimes. It can be confusing. I always tell people there's a lot of different candlesticks. I don't know all of them. I don't expect you to know all of them. I don't expect a trader that's been trading 10 years to know all of them, because it's like, we don't need to know all of them. You only need to know a few.
Right.
So don't get tripped up on candlesticks ever. I always tell people, just remember a few. Evening stars and morning star candlestick patterns, those are always formed. Like, they form heavily. So I always tell people, learn star patterns, learn engulfing patterns, because ideally those candlestick patterns form a lot. Like, I don't know all the candlestick patterns, but I know that those candlestick patterns are the ones that I'm always able to find, like, always. So going on to the third confirmation, stochastic. Anytime stochastic is up here above the 80 line, that lets me know that the market is overbought and it's looking to sell soon. So that's my third confirmation. And like I said, I throw it in at the end because once you do supply and demand, you found your candlestick pattern, this is the last confirmation I need. So right here, I would have, after that candle closed, I would have got my entry for this sale right smack dab here, literally right after that candle closed, going off of stochastic, and I would have rolled it all the way down.
So why do you wait till the candle closes?
The reason I wait for a candle to fully close is because anything can happen. And just from previous experience, there's been times where I didn't wait for a candle to close because I thought, what I saw was what I saw. And after the candle fully closed, I ended up being wrong. So you always want to make sure you're right. Like, it's good to be confident, but it's smart to wait for that confirmation to be fully met before you jump the gun.
And I'm a gun jumper. I be all in.
Funny too, because as soon as I said that, I saw your facial expression. I'm like,
okay, so you said always wait for the candle to close. And so do you mark up all your charts on the one day?
I don't. And this is what I will say. This is one way to enter this position. I'm going to keep this circled. Now, when I go down to the lower time frame, it's going to look a bit different probably because we're switching time frames. So I might not. I keep it circled so I'll be able to find it. So you notice how this is circled right where that evening star was at. But if we look right here, you don't really see the evening star, but you have to find it. So if I delete this, first thing, notice how we're on the 4 hour and our zones still are right where they need to be. That's very important to recognize. Now, for a 4 hour entry, I still go off of the zones that are here. The only thing is, when you go down to the 4 hour, you have a better chance of getting even more entries, but you want to limit it. That's why a trading plan comes into mind. And that's why I say I only get about 3 entries max for one trade. And that could go.
When I went to Georgia, that was my first time doing multiple entries. And so my account was booming with the multiple entries.
I bet it was. I just know it was. It can make you a lot of money. You just have to, as long as your entries are good and you're comfortable with your risking and you trust your setup, it usually work out. Like, it usually pay really good. So I just know your account was lit. Your account was thanking you. So to answer your question though, in regards to do I always mark on a day chart? Yes, but I still go down to the lower time frames and you still have the opportunity to get, multiple entries. So right here was where that morning star was circled. And honestly, if you look right there, it's still a morning star right there. So this could be a 4-hour confirmation, because sometimes the day chart takes a long time to close. And sometimes the 4-hour might move faster, because whatever happens on the higher time frame, it happens on a lower time frame at a faster rate. So yes, we're going to keep the same zones that are here. And honestly, the same way you got the entry on the day chart from the evening star, that's going to be the same way you'll get your entry right here on the 4-hour. So, let's see. So right there's your evening star. Once that candle fully closed, again, you could have got your entry right here. A lot of traders, me being one of them, want that extra confirmation. You can also go with the break and retest method. So if you notice, price broke below the zone, and then right here, it did a retest. And it's a very small retest, but ideally, that's enough of a retracement for you to go ahead and get your entry for that sale. So you could have got an entry after that candle closed and just got in right off of this candle, or you could have let price go down and let it retest and then got your entry right here.
Right. And so it's always going to retest, or?
I'm not going to say it'll always retest, because sometimes there will be moments where you might not get a retest, but about 80% of the time, it usually does do the retest. I think the only time I don't get a solid retest sometimes is with cryptos, because sometimes cryptos take off. But normally I get a retest. It's just a matter of waiting for it to retest. Sometimes it takes forever. And you might think you missed the trade, but usually the retest does happen. It just takes forever. And then go ahead.
No, go ahead.
You sure? I don't want you to forget.
Well, I was gonna say, so what I was doing also was trading in consolidation and didn't know it.
That is very important to recognize. And consolidation, obviously, is when the market is literally not moving really. Mm-hmm. Those are the moments where you want to definitely utilize a break and retest. And what I do is, depending on how the consolidation is happening, because sometimes it can be something like this, where it just moves in like a sort of straight line type thing, or it could be consolidating in like a pennant pattern type thing. I usually draw out the areas of consolidation so that I can see that clear break of it. Because once you get a breakout of that consolidation, at that point, it's a matter of seeing where it's going to break and where it's going to do its retest, and then you'll get your entry for however it breaks. Because sometimes consolidation can break downwards or it can break upwards. So depending on where you get that break, just look for a retest and then go in for that trend.
Right. And that's when I use the lines. When the lines cross, then I know it's going to keep going.
Yeah, and the one thing I'll say with Stochastic, sometimes it'll show you when consolidation is happening. Because like sometimes it'll do stuff like this where it won't move from a certain area. And that'll let you know that the market is still ranging. Because this right here is literally following what happened right here. So yeah, you got that part, girl. And just to tie this up, I threw on this positioning tool for a sale just to show you how you would go about with the stop loss and the exit point. Now, if you notice, when we're on the 4-hour, this tool is a bit different on the lower time frames, because like when we were on a day chart, it was showing like, I don't know, 200 or 100 and some pips for the stop loss. I can't remember the exact number, but since we're on the lower time frame, it's showing that it's going to be a smaller risk because you're on the lower time frame. The higher the time frame, the bigger your stop loss will be.
The higher the time frame, the bigger the stop loss should be. Okay.
And whenever you set in your stop loss, I always tell people, yes, keep your risk in mind, because you don't want to be risking a lot, but don't set your stop loss too tight, You always want to set it based on technicals because you don't want to be in a winning trade and get stopped out early because your stop loss was too tight.
So the higher the time frame, the bigger your stop loss should be.
Mm-hmm.
And on the lower time frames, they can be tighter.
Mm-hmm. And I know this meeting is almost over, but what I will say is, even if you're setting a big stop loss, like if you have a 180 pip stop loss, keep in mind that as long as you're risking 1% of your account, that stop loss shouldn't matter. Because as long as you're respecting anything from 1 to 3%, you shouldn't be over leveraging your account. And there's many apps that you can use that make sure that you following that 1%. You can use Steinu. Steinu is a paid version. They do a 7-day free trial, but it's honestly really good and it's really worth it. And it's actually it's super good for like funded accounts and stuff like that, because those accounts are super strict on discipline and risk management. So definitely look Steinu up. If you want a free version of a profit calculator, look into fxtm.com. They have fxtm.com. You don't have to make an account with them. They allow you to use their tools free of access. They have a profit calculator as well as a PIP calculator. The PIP calculator literally calculates based on whatever your pips are. So like for this example, 85 pips. The profit calculator is so precise that it calculates based on the opening price and the closing price. So the profit calculator is a bit more accurate because it allows you to literally put the price you want to enter the market and the price you plan on closing the market versus you going strictly off of, those numbers. Does that make sense?
Now this is confusing. I'm looking at this like, what? Right. Okay.
Well, to sum this up, if you've never used this tool, it pretty much, they have it for your buys and your sales. And ideally, the only numbers that matter is the 85.1, the risk reward ratio, which is in this example 2.29%, and the target price, which is 194.7 pips. All the other numbers don't matter. I don't know what they mean. I've never used them. If someone sees this video and they can explain it, hey, hit me up, let me know. But in all my 3 years of trading, I've only focused on the 85.1, the 2.29, and the 194.7. Okay. And this 2.29, you're probably like, where did that come from? It's literally the difference between these numbers. It's the ratio.
Okay. So you would place that tool on the supply line?
Yeah. So for your sales, you want to use the short position tool because short position is for your sales. And this tool can be found a couple tabs down from where you will find that rectangle tool. And then for your buys, you use the long position tool.
Okay.
And that goes on your demand zone.
And you place that one on the demand?
Yes.
Okay. Yeah, I never knew where to put it.
So we have like 9 more minutes, maybe 8 of this video, and I just want to say peace and power to everyone. I hope everyone is well. I will continue to share this information with those of you who have decided to go on this journey with me. Becoming independent or becoming a trader assists you in funding for your small businesses and other ventures that you would like to participate in. There's a lot of money out here to be made. And so a lot of us start small businesses. Excuse me, y'all, I'm sleepy. A lot of us start small businesses and we are taking funding from our personal or household to fund the business. And that is rule number 1 in business, on the do not do. And so this is another way that you can fund your business and your other things. Um, you can fund your life, learn how to trade. And so just want to put that out there again. Peace and power, and I'm out.
Okay.
It's all right. As far as the only thing that's different about the 4-hour, if you noticed on the day chart, it was easier to this tool zone to zone. Mm-hmm. But since we're on the 4-hour and the chart has more candles, it appears to be, a bigger path. Mm-hmm. What I will say is this is where multiple entries come into place. Now, this could be for your first entry. You could have got a second entry, like I said, on either this pullback or the one that's hiding underneath here. But ideally, whenever you're using this tool, if you're not on the day chart and you're on the 4-hour, just make sure your risk percent is anywhere between 1.5 and up. That's a realistic profit goal.
1.5 and up.
Mm-hmm. Because even if I put this on 1.5 instead of the 2, that's still 127 pips that you'll catch. Now, if you want to, if you wanted to take it a step further and drag it down for like a 3% growth, then that's 253 pips. So, and of course, keep in mind that if you get multiple entries, you can always set a target price for right here. So that could be your first TP, which will be 1% that you'll be locking in. Mm-hmm. And then you could set your second TP down here, like at that bottom point, if I could get it right on. There you go. So you'll have one TP that'll lock in for like 127 pips, and then you'll have an additional 100 and whatever pips for a total of 253. Mm. That's how you secure your profit. So in the event that if the market pulls back, turns around or whatever, you'll probably already be out the trade.
Right.
Does this make sense?
If you said what?
I was saying, does this make sense?
That part I got lost a little, but you were saying like the multiple. I'm thinking multiple entries mean when I enter, get in 5 times. So you're saying multiple entries is when the market pull back, you get back in for another one.
Yeah. Okay. So like right here when we got the break, because like let's say you got an entry right here after that candle after the evening star pattern closed. Let's say you got your entry right away. Boom, that's your first entry. Let's say you came back to the chart, you notice price pushing down, and you notice you came back right at a retest of your original entry. So now you're like, okay, I can get another entry. Boom, second entry. Now price has already moved down. You got 2 entries for your take profit 1. In the perfect world, if you do get 2 entries, that's already 127 times 2. I think that's like 413, like 254, if I'm right. Yeah, duh, because half of this is that, duh. Anyway, so let's just say you got those 2 entries. Now you locked in 255 pips. Now you're like, okay, I see another retest happening. I already locked in this profit. 2 trades already have happened. 3 trades at the max is ideal. So if you do get an opportunity like this, you can get your 3rd entry, and then you lock in your other trade. Okay. As long as you can recognize the break, the retest, price pulled down right here, another retest up here. It didn't reach the zone all the way, but this is still considered a retest. And if you look at it even deeper, that's a shooting star. Right. Fun fact, if you didn't know, but it sounds like you might have knew. So whenever you see those shooting stars up at the top, boom, that's your next entry. As long as you can understand that and the structure of price, you'll be rolling.
Girl, thank you. I appreciate you. I thought top down was you saying you're in the supply zone and just trading it when it riding in the sale. So you cleared up a whole lot. Saying you're in the supply zone and just trading it when it riding in the sale. So you cleared up a whole lot.
I am so happy I did. I'm so happy that this was helpful.
It was.
If you have any more questions, feel free to dish them out. If not, I'm going to stop this from recording and I will send everything over to you.
Thank you so much. Those are all the questions I have for now.
Yeah, for now.
Yeah, I think I'm gonna go ahead and start trading on the day, well, at least looking at the day chart because it doesn't give me anxiety. Because, like you said, the more candles, it looks